I think that one of the best techniques or methods to do that is to pay yourself first. This means that whenever your paycheck comes, first things you deduct, let's say 10% or 20%, and you invest that money. So this is money that you pay yourself. This is how you pay yourself. First thing, you basically force yourself to save or to invest 10, 20, 30%, whatever the number is, that fits you. And this is how you will be forced to live below your means. And this is probably because if you just track your expenses and if you just are good at managing expenses, this will not help you if you spend everything that you earn. You first need to save some money, and you do that by doing that first thing right after you get your paycheck. So this is a very good mental exercise and very good mental model for people who want to really succeed financially in life.
All right, welcome to the Winner Circle podcast. And you already know I'm your host today, Jay Adewole, and I'm thrilled to have joining us for a timely and important conversation titled The Financial Lesson They Don't Teach in School, which is going to be a very, very interesting conversation today. Today, I have joining me Robert Rolih, a financial educator and also an advocate for practical money knowledge. Robert's mission is to bridge the gap between all the financial knowledge we need is Robert, their money. And not just only that, building a lasting wealth. With years of experience guiding individuals on financial planning, investing, and wealth building strategies, I can assure you, Robert understands that the lesson we need to succeed with money often aren't taught in classrooms. Because through his work, he equips everyday people with tools, framework, and mindset required to make smarter financial decisions and achieve true financial independence. So in today's conversation, Robert will share key financial lessons everyone should know, the pitfall many fall into due to lack of knowledge, and the actionable steps to gain control over your money, no matter your age, no matter your background. I want you to join us as we explore how knowledge, discipline, and practical habits can empower anyone who want to break circles of uncertainty and take meaningful steps towards financial freedom. So let's dive in.
Yeah, the reason was that I was an entrepreneur and I made a lot of money, but then I lost it because I trusted financial advisors and gurus. And it was really a painful experience because I trusted these guys. I thought they were doing great things with my money. But in the end, I realized that their interests are not aligned with my interests. And the only thing that they cared was their commissions and fees, and they didn't really care about my results. So that is how I lost a lot of money. It was really a painful experience for me, but also if I look back, it was a great experience because after that, I started to learn on my own about how money works, how investments work, what is happening behind the scenes of the financial industry. And because I learned all these things, I was able to get back on track. And now I'm happy that I can give this knowledge to people all around the world so they can avoid making the same mistakes that I did in my career. And that is something that is really precious.
What experience shaped your understanding of money management?
So yeah, money management, before I became financially educated, I didn't have a clue about these topics. I never read books about personal finance and investing. I was an entrepreneur, I was just I knew how to make money, but I didn't know how to manage it and I didn't know how to invest it. And later in life, I realized that this is a huge mistake because on one hand, you need to learn how to make money. On the other hand, you also need to learn how to manage your money and how to invest it profitably. So this goes hand in hand.
There's something that came to my mind, and the word itself is many people struggle with money simply because they weren't taught in school.
Yeah.
They weren't taught the fundamentals. They teach biology, teach everything. So why do you think schools have largely neglected these critical skills.
Yeah, this is quite all around the world. It's the same situation. I also grew up without this knowledge. Also, I went to schools and they didn't teach me anything about these topics. But we all agree that this topic is super important for our life. So yeah, our schools were created in the last, let's say, 100 years ago or 50 years ago. And of course, at that time, you just needed workers in factories and so on. So the main goal for the schools was to teach people how to work. And I think that this is still true all around the world, and we still have this situation where our school systems, they don't prepare us for our lives properly. They just prepare us regarding some technical skills, but when it comes to money and investing, we need to learn that on our own.
We need to learn on our own,
Yeah.
And that's the truth. That's why you read a book. All right.
Yeah.
We're gonna get there. So now, when it comes to personal finance, for you, what are the top lessons everyone should know? What are the
Yeah.
top lessons?
So one of the top lessons that I teach constantly in my book, in my seminars, webinars, and so on, is the effect of small fees on your long-term results. Most people don't know that if you invest your money and if you have some kind of management fee, and practically all the options, all the investments that you can invest in, they have management fees. These are annual fees that they deduct from your account every single year. So if you have small management fees, this can really hurt you a lot in the long run. So small management fees or small annual fees that you are paying because you invest your money can lead to big financial problems over time. And if you are just a regular investor, maybe someone investing just 5,000 or 10,000 per year, you can easily lose over $1 million by the time you retire because of these small fees. These fees are hidden fees. The financial industry doesn't explain how they work, and they don't look dangerous at first glance. But over time, they quietly compound against you and rob you of your financial freedom. So this is one of the core messages that I teach when I have my seminars, my webinars, my courses, and so on. Yeah, this is a good question. So, for example, if I look at me personally, one of the biggest mistakes that I did in my investing career was trying to get rich quick. I was trying to get into aggressive investments where people who offered these investments, they were basically promising huge returns in a very short period of time. Now, the reality is that these things never worked. I only lost money because I wanted to speculate in the short run, because I wanted to trade maybe forex or stocks as a day trader or something similar. So this was a very painful lesson, and a lot of people are making the same mistake. They think that they can get rich quick with short-term trading, day trading, and similar activities, but this almost never works. It's similar to going to casino. The house always wins. And it's the same in the investing world. If you go into short-term trading, day trading, the house, in this case, brokers who are offering this kind of trading services, only they are winning. And of course, investors are losing all the time.
So when we talk about investment, you talked about investing. Many people hear about investing, but they feel a little bit intimidated because there's so many information. There's hey, Winners, have you got a business or brand that deserves to shine? I'm just saying this right now because I'm giving the opportunity for you to advertise on Winner Circle with Jay and connect with thousands of ambitious entrepreneurs and leaders who are about growth. It's all about growth. So whether you are advertising a product or a service, secure your slot as low as $100. So what are you waiting for? Email us at advert@winnercirclewithj.com. Here at Winner Circle with J, we just don't talk success, we create success. All right, see you soon.
Yeah, this is a problem because if you are overloaded with information, and also when it comes to the financial, this financial niche, or investing niche, there is a lot of very of terms that people don't understand. These are Wall Street terms that are really hard to understand, and the Wall Street and the financial industry is basically trying to confuse investors into believing that they cannot do it on their own. So the more complicated it sounds, the more people say, okay, I don't understand this. I will give you my money. Please manage it for me. And this is one of the worst mistakes because, like I said earlier, their interests are not aligned with our interests. So when it comes to smart investing, I only invest for the long run, for 5, 10, 15 years. And I invest in products, in financial products that have the lowest possible commissions and fees. For example, one example that I'm personally investing in constantly are low-cost index funds or ETFs. These are basically baskets of stocks. It's similar to mutual funds. You invest in a basket of stocks, but these ETFs, they have much, much, much lower fees compared to mutual funds. And that is why, over the long run, you can accumulate much, much, much more money because you are paying less fees. So, as I often say, investing is simple. It's the financial industry that works hard to make it complex. And you should always have this in mind when it comes to investing. You need to learn some details, but these details, today, you can go on YouTube, you can go and ask ChatGPT. There is a lot of free resources. You only need some time and you need to be courageous so that you start to learn about these things. And then it becomes easy.
For someone who's trying to invest, what's the first step you would advise them
So,
to take to start building wealth safely? They want to play safe. So what would it be?
yeah, Lao Tzu once said that the journey of 1,000 miles begins with the first step. And it's the same in investing. You need to take the first step. After that, everything becomes easier. Now, the first step can be very easy. This is opening an investment account, opening a brokerage account, or a retirement account. Let's say 401k, or if you live in any other country, there are different retirement accounts, but it doesn't matter. So the first step is to open your investment account, and then just regularly invest in some kind of low-cost ETF that basically tracks the whole market. For example, S&P 500 ETF is one of the funds that I'm investing in, or you can just choose a global ETF which invests in the biggest global companies or something similar. So regular investments are the key. If you, historically speaking, if you just invested regularly, I don't know, 3 times per year or monthly or bi-monthly or quarterly, whatever, you just regularly invest, this is the winning strategy because your money will compound. And also, you will be buying when the prices are going up and also when the prices are going down. And the most profitable thing in investing is, of course, buying when the prices are going down. So if you are regularly investing, then you automatically invest also when the times are bad for stocks, for example, when there is a recession or something similar. And at that time, these are the best opportunities for long-term investors. For example, let me give you one example. In April 2025, Trump came up with all these tariffs, and it was a total chaos on the markets. And the stock market went down 30%. So minus 30% in a very short period of time. Now, most people were panicking. Sell everything, recession is coming, it's the end of the world. But I was heavily buying at that time. And I also issued several buy signals. I said to my members, I said, I'm buying, because I'm always telling my audience, what am I doing, personally. I'm not a financial advisor. I cannot advise someone, but I'm telling just what I'm doing. And yeah, at that time, it was a perfect buying opportunity. But most people, of course, are doing the opposite. Most people were selling at that time in panic. But if you are regularly investing, you will also invest in such times, and this will be the best investments for the long run.
All right. Thank you so much for sharing that information. I'm a business consultant and also business coach. I love what I do. I've helped I've guided a lot of businesses on how to navigate, through tough times and and also to get started. But for what you said, I think I need to follow you. So you can give me investment guide. It's very important. Investment guide is very, very important. So I
Yeah,
will know when
mentors
to
are
buy the
super
dip.
important in business and in life, in investing.
Yeah.
Whatever you
Mm-hmm.
are doing, it's best to
Mm.
do it with a mentor.
Yes, definitely. It's very, very important. Like I can get like when to buy the dip, buy the dip or just instead of folding. All right, let's talk about debt because if we see everything today and we don't talk about debt, then we are really fooling ourselves. That is the biggest challenges for many. So now for you, how should people approach managing and eliminating debt? Biggest challenges for many. So for you, how should people approach managing and eliminating debt?
Yeah, this should be one of the first priorities, especially if you have credit card debt, because the interest is very, very high on credit card debt. So yeah, in my book, I talk about something that I call the financial success formula. And this formula says that first, when it comes to becoming financially successful, first you need to increase your income. Okay, so if you have debt, first thing that you should think about is how can I increase my personal income? And you can do that by learning new business skills, new technical skills. For example, if you are a programmer, programming is your technical skill. But then you can also learn about marketing, selling, communicating, public speaking, and so on. So all these skills, these business skills, will help you to become more successful in your niche. So for a programmer, if you are a programmer and if you have great technical skills about programming, but if you add some communication skills and some marketing skills, and maybe some selling skills, you can become much, much, much more valuable for the company where you are employed. Or if this company doesn't see the value in this, you can get a job somewhere else easier if you have these skills. So the first thing is to increase your personal income. And when you do that, then of course you can save more money, and you can of course pay off this debt more easily. And this is the first step. And after that, of course, you need to learn how to invest money. So after you pay off your debt, because this should be your priority, then you can start to invest with the difference between your income and your expenses. And you should always have this difference, because if your income is not higher than your expenses, you will always be in this rat race, let's say it like Robert Kiyosaki says, rat race. You are never saving anything. You are just, working for the banks. So yeah, after you have a surplus, then you can start learning about how to invest that money properly.
Just to end that word of debt and debt management itself. For you, what's the greatest or the biggest misconception people have about credit in America?
Well, the one thing is that I'm not from America. I'm in Europe, so don't have such an insight into that. But of course, I'm a lot on social media and I see what people are talking. There is a good debt and a bad debt. So if, for example, if you are in debt because you started your own business and this business can provide you with much higher income, this is a good debt, because it gives you the potential to earn much more money. But if you are in debt because you just want to buy a bigger car, then this is a bad debt because this debt will never give you new opportunities or opportunities to earn more money. So yeah, this difference between a bad debt and a good debt, I think that this is one of the biggest misconceptions from all around the world, and they have the same
Yeah.
challenges. Yeah.
So now let's talk about mindset because if you have all the advice, all the financial knowledge, maybe you get it from ChatGPT or they got it from you, Robert, or whoever they get this information from. If they have a wrong mindset, then there's a problem.
Yeah.
It plays a huge role in financial success. So how does someone develop confidence in making money decisions? And what habits or practices can help them daily?
And you need to make some mistakes, of course. Also, when I started in business, my first I didn't start as a financial expert. I started in business. I started as an entrepreneur, and in the first years, I made a lot of mistakes. But when I started to learn how to do business, how to sell, how to market your products, how to package your products, and all these things about business success, and I them in my business, I became more and more confident. And I became more and more motivated because when you build on small successes and when you build on certain knowledge that you have and that you learn, this will bring you more confidence. And then, of course, because when you learn something, you apply it, you maybe adjust some things, and you succeed. This basically builds your confidence because you know that the process is working. And it's the same in the personal finance field. You need to start. You need to start learning about these things, and you need to start with small steps. Start with small investments, and then see how this goes over time. And then you just add bigger amounts of money. So this is how you do it. This is how you experience and how you build, of course, also the confidence that you are on the right track.
You don't want people
like that tomorrow.
So, do you have any tools or method you can recommend for people who are watching this today and they want to be
Yeah.
financially educated or literate?
It's a great question. I think that one of the best techniques or methods to do that is to pay yourself first. This means that whenever your paycheck comes, first things you deduct, let's say 10% or 20%, and you invest that money. So this is money that you pay yourself. This is how you pay yourself. First thing, you basically force yourself to save or to invest 10, 20, 30%, whatever the number is, that fits you. And this is how you will be forced to live below your means. And this is probably because if you just track your expenses and if you just are good at managing expenses, this will not help you if you spend everything that you earn. You first need to save some money, and you do that by doing that first thing right after you get your paycheck. So this is a very good mental exercise and very good mental model for people who want to really succeed financially in life. You just force yourself, automatically deduct 10, 20, 30% from your paycheck, and this money goes automatically into investments or into savings. And then you spend the rest however you want, but you are limited because you already deducted your investments.
All right. So make sure you pay yourself first for investment, which is great. But
Yeah.
many people fear investing. They feel they think it's too risky. All right.
Yeah.
Especially beginners. Because we are talking about beginners here now, right? So for you, what's a practical first investment you're going to suggest to a beginner, a brand new to the market? What's just one? Just get started with this. If it interests you, then I can now show you the others. What would be that first investment for someone brand new?
Risky if you invest for a short period of time. So, for example, if you invest for days or weeks or maybe a couple of months, it's very risky because you never know what the market will do in 1 month time. There can be a big crisis or a recession or a new virus or whatever, and the markets can go down. So if you think short term, it's very risky. But when you think in decades, for example, in 10-year period or 20-year period, the markets are not risky. Because if you take a look at history, for example, the stock market that has provided us with the best possible returns in the past, in a 10-year period, the stock market has never had a negative return. And usually it has a very, very, very nice return. And because of all the money printing that is going on around the world, I think that this will continue. Unless the aliens invade and shoot us all. This is, of course, always a probability, but it's a very small probability. Now, I'm always an optimist, okay? I'm always an optimist. And when you take a look at our history, humanity has always improved in the past, has always innovated. And I don't think that this will end. So I believe that we as a race have a bright future. And when it comes to investing in the stock market, for example, I think that there is a very, very, very high probability that stocks will be higher in 10-year time than they are today. So this is something that as an investor, pessimists are always very smart. They sound very smart. There will be a new recession, downturn, everything, everything is bad. They sound very smart, but they never make any money. Only optimists make money when it comes to investing, because decade after decade, the stock market goes up. And I don't see a reason why this should stop right now. So, yeah, investing is very risky if you are a short-term investor, if you think in days or weeks or months, but it's not risky if you think in decades. And this is what I teach my students, that they need to think long-term, because long-term thinking beats all short-term traders, all speculators, and so on.
That's so powerful. Your view is actually is right on point. So long term is the goal. Investment is all about long term. So if
Yeah.
you look at it, there's sometimes there was some years ago that we had Bitcoin came from 80,000 went to over 20,000. A lot of people sold because they were like, "Oh my God, 2 years it never went back up until recently that I think Bitcoin got to 150K." So imagine if somebody kept their money without taking it. So right now they will have made double or triple or who knows. So it shows long-term investment is the key. So if I'm going to ask now, let's look at financial growth in the long term. What strategies do you emphasize for long-term financial growth?
Yeah, like I already mentioned, it's regular investments. This is a method called dollar cost averaging. So you just invest every quarter or every month or bi-monthly or whatever suits you. And this is one of the best ways or approaches when it comes to investing. Of course, you need to invest in good assets. And for example, the stock market, if you are investing in a low-cost ETF, so low-cost index fund, this is something that I do. This is something that makes sense, because companies innovate. When you invest in index funds or ETFs, you invest in companies, and companies innovate. Companies bring new value to the market. They are improving
Sure.
our world, and that is why they have this long-term uptrend. The same goes with Bitcoin, for example. Bitcoin is also an asset that is like new gold or digital gold. It's a new store of value asset, digital store of value. And if you understand Bitcoin, if you learn about Bitcoin, then you can say, okay, Bitcoin has a very, very, very high probability of going up over the long run. Now, of course, in the next year, it can go also down by 50% or 60% or 70%. This is in the nature of these new assets. And Bitcoin is still new. It's only 15 years old. So you cannot compare it, for example, to gold, because gold has been around for thousands of years. But Bitcoin is a new gold, is a gold for new generation. And if you learn about Bitcoin, if you understand Bitcoin, then you can basically assign some kind of probability that is high, that in the long run it will have great returns. But of course, with ups and downs. Basically, you can use the same strategies. When it comes to long-term planning for your retirement, it's basically the same thing. You need to invest in the right growth assets. And when it comes to growth assets, these are the assets that will very likely grow over the next decades. You simply invest in the stock market, or you invest a part of your portfolio, a smaller part of your portfolio, of course, in Bitcoin. You can also invest in bonds. Also, a bit of your money also in gold, but I don't invest a lot in gold, because gold historically just kept pace with inflation. So, yes, I'm mostly investing in the stock market for the long run.
Right. That's great. Thank you so much. So now let's touch base on passive income. That's the goal for many beginners. So for you, what are the easiest way to start creating additional income streams?
Yeah, one way to do it is to invest in real estate, for example. But you need to have a bit more money, and this is also not an passive investment. It's an active investment because it takes a lot of work. It's like running your business. One way is to buy stocks, of course, because stocks pay out dividends. And also, for example, if you buy an index fund or ETF, this is basically a big basket of stocks. You can also buy a themed ETF that is basically dividend ETF. So it includes only the companies that are paying high dividends. So you can apply a lot of different strategies, but these are two of them. And this will give you additional passive income, of course. Okay. So when you go into real estate, of course, tenants pay, rents are your passive income. Or if you go to invest in stocks, of course, dividends that you receive, this is your passive income. Now, when it comes to business, I don't believe in passive income. Because business, when you are in business, you need to constantly innovate. You need to always produce new products and services. You need to always be in touch with the market. So I don't believe in passive businesses. Just set up something and it will work on its own. Nah, it doesn't work like this. So yeah, but when it comes to investing, I think that real estate investing and stock investing can be two good ways to build passive income.
Thank you so much. I know a lot of people decided to just go into what they consider as passive, and they end up being stuck to a 9 to 5 business, and they have to go to work almost every other day. Yeah. So moving forward, this is actually a very decisive point right now, because a lot of people listening right now, or who are going to listen to this show, are adults. And many adults feel that they get to a point, maybe after 40, 50, they feel that it's too late to start learning about money. So for you, what advice do you give to those who feel behind, that there's no point?
Yeah, that's a good issue, and yeah, but it's never too late to start. It's never too late to start, because nowadays, very likely, if you live a healthy lifestyle, you can live to 90, maybe 100, and this is quite a lot of time that you still have. Even if you are now 50 years old or 60 years old, you still have decades of healthy life. And we used to live till 70, but now the times are changing, and of course your life expectancy can be much higher. And you can still have a lot of decades in front of you, and that is why it's never too late to start learning about these things.
Never too late to start learning about these things. Thank you so much.
Hey, winners, as we continue our journey together today, I want to share something truly special with you. Over the years, I've had the privilege of coaching countless business owners, entrepreneurs, leaders, guiding them to achieve breakthrough results and unlocking their full potential. So I'm opening up just 4 slots for my monthly business coaching program. That's right, 4 slots. After being fully booked for the past 3 years, if you're ready to elevate your business with personalized guidance, proven strategy, and a supportive community, I'm here to help you navigate challenges, refine your vision, and achieve your goals. So if you're committed to taking your business to the next level, I want to hear from you. Reach out to me directly at jay, J-A-Y, at winnercirclewithj.com and discuss how we can work together to build the future your business deserves. So don't wait. This is your moment. Join Winner Circle and let's embark on this transformative journey towards success together. And now let's dive back into today's episode.
So for our listeners, we are still on the Winner Circle podcast, and our guest today is Robert Rolih. And the topic for this conversation is financial lessons they don't teach in school. That means we are talking about real world money education. Everyone, when I mean everyone needs. All right, we'll be right back after this advert. All right, guys, welcome back to the Winner Circle podcast. I just want to say, I hope you're finding this conversation with Robert Rolih as eye-opening and practical as I am, because I'm learning quite a number of things that I've not probably learned somewhere, or probably I've not seen in Google, because this is real world situation. The thing that stand out with Robert, or how he's analyzing financial literacy, is he makes it so approachable, and he's reminding us that building wealth isn't about luck or having a high-paying job. It's about knowledge, strategy, and consistent action. And today we've already talked about the lessons schools often skip. And I don't know the reason why they don't teach us budgeting, they don't teach us investing, and even understanding basic credit. They don't teach us. And like what he said earlier, he said the goal of school before was to train us to start working in the factory, production. They really weren't thinking you're going to want to start a business or whatever the thing is. So for many people listening, finances can feel confusing or even intimidating, especially when it comes to those first steps towards managing money wisely. And that's where I'm going to stop for today. And I'm going to try another question to Robert. For someone who feels overwhelmed or unsure where to start with their money, what's the very first actionable step they should take to begin investing and also begin to build and control their finances? So I'll let you speak.
Yeah, the first thing is to start to learn about these things. And today, this is very easy because you have YouTube, you have ChatGPT, you have a lot of articles, you have a lot of books where you can learn from. All it takes is just maybe after your dinner, instead of watching TV, maybe just start to read a book for half an hour, or maybe just watch a YouTube video about personal finance for half an hour. So after dinner, you just do something that is beneficial for you, and you just don't watch TV. You do something that will benefit you in the future. And this is, I think, one of the best ways to start learning, maybe just 20 minutes per day, or maybe half an hour per day. And this can make all the difference in the long run.
All right. So if you could teach every young person one financial lesson today, what would it be?
First, learn how to make money, and then learn how to invest money. So making money comes first, and then invest your money. Don't confuse these two things, because if you don't have a good personal income, you will not have enough money to invest. It will take you, I don't know, 200 years to accumulate something if you invest just, a couple of dollars per month. So you first need to increase your income. You first need to learn how to make money. And then, of course, when you have some money, then you learn how to invest it.
All right, learn how to make money first before you start thinking about investment. So as we begin to round up, for listeners who feel a little bit overwhelmed by finances, what's one actionable step they can take immediately after this episode?
Yeah, one thing, I just prepared a free 90-minute masterclass that they can attend. It's totally free, and it will basically show you how to start investing. It will teach you about the importance of taking care of fees, how to minimize fees that you are paying when investing. I also talk about how to invest in the age of artificial intelligence and money printing. So it's an amazing content-only webinar or masterclass. And maybe this could be a first step,
Much for that.
Yeah, and of course, they can register at my website, robertrolih.com. So it's my name and surname.com. It's very easy.
I want you to suggest 5 resources people listening to this show can grab that will teach them about finances. It could be probably books. 5 books you would suggest that they can grab that would help them
let's do
more
it.
knowledge on finances.
One book that I always recommend is Rich Dad, Poor Dad by Robert Kiyosaki. This one is an amazing book. It teaches you about personal finance and key concepts when it comes to personal finance. Then, of course, you can also read my book. This is the one here, The $1 Million Decision by Robert Rolih, of course. So The $1 Million Decision. Of course, I'm a bit biased, but it's a very good book. And then, of course, one book that I really love is How a Second Grader Beats Wall Street. So How a Second Grader Beats Wall Street. This book teaches about investing in ETFs, in index funds, and maybe the psychology of money. The Psychology of Money
Mm.
is another book that I really love. It's a book about how to think about money and investing. So maybe just these 4 books so that we will not overwhelm our listeners.
So, what about if they need to reach out to you?
Yeah, it's simple. Go to robertrolih.com. So it's Robert, ROLIH.com. So my name and surname.com, or you just Google my name and you will find my website. And you can also register for my free 90-minute masterclass on that website. So yeah, this is, and I also have a lot of articles on the page and other stuff.
All right. Thank you so much. And that's a wrap for another insightful episode of the Winner Circle podcast. I want to say a huge thank you to you, Robert, for joining us and sharing such practical, actionable, and empowering lessons on financial literacy.
Yes, it was great. It was amazing. So thank you very much for inviting me.
All right. Thank you so much. And if you found today's conversation inspiring, don't forget to subscribe, rate, and review the Winner Circle podcast on your favorite platform. Your support helps us continue bringing inspiring leaders and practical ideas to listeners around the world. I want you to connect with us on social media and share your biggest takeaways or questions from today's episode. We love hearing from you how this discussion helped you take meaningful steps towards financial empowerment. Remember, Winner Circle with J.com is the website, and Winner Circle with J on all platforms. I want to say thank you for tuning in to the Winner Circle today. Remember, real financial freedom starts with clarity, knowledge, consistent action. That's one thing you should know. And until next time, I'm Jay Adewole, encouraging you to keep learning, growing, and take control of your financial journey. Thank you so much, guys.